to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, looking dapper this morning, Mr. AJ Brown. Good morning, sir.
Hey, Cyprian, thanks for having me again on my own show.
Yeah, episode.
I just heard myself say that, and I was like, what? Hey, look at this cool hat I got.
Oh, nice.
I just got it in the mail yesterday. It's from our friend Dan Passarelli, who was on our show last week.
Which was a great episode, and I know that you're still finalizing the upcoming webinar, so we'll go ahead and throw the link in there because we had to move it, I believe.
We had to move it. He had a personal emergency of sorts on Wednesday, so it's scheduled for this upcoming Wednesday, and we actually moved it an hour later for our folks on the West Coast. So it's at 8 Eastern, 5 Pacific, so that's going to be even better for folks. So they should definitely register when you put that link up.
Yeah, and we had some really good insight on short squeezing. I know that he has some really good insights on looking at implied volatility, which we'll review. Monday was President's Day, so it's a shortened week. Light economic news. And I feel like yesterday, most of the day, the rumors or the murmurs were, let's wait and see for NVIDIA earnings, right? And then at the end of the day, NVIDIA, or the day before, NVIDIA earnings came out, and since then we've been cruising to all-time highs. I mean, we're almost at 5,100. We're only 10 points away from 5,100. What do you make of this break to the upside? I mean, we were questioning whether it could be sustainable.
Yeah, I'm still questioning that. But NVIDIA, I mean, gosh, they are the market, superstar right now. And they took the whole market higher. So, leading up, we had, at the end of last week, we had worries about inflation, right? Investors are kind of bummed that the Fed keeps pushing back on lowering rates. The Fed says inflation is not under control yet. We're going to keep rates where they are until it gets more under control. And so, folks, I mean, I'm going to throw up on the screen really quick, Sip, the expectation by investors that the Fed is going to lower rates. I don't know if you remember, it wasn't long ago that they thought in March that the Fed was going to lower rates. Here, it's almost 100% that the Fed is not going to do anything but, sit on their laurels when it comes to rates. May, they said, when we thought in March it wasn't going to happen, we saw in May that people thought it was going to happen. Well, that's changed. Folks think that in May there's not going to be any change in rates at all either. It's 78.4% to 21.1%. So it looks like investors are now thinking maybe June, but there's quite a few people who think even by June it's not going to happen. So, this whole kind of dour feeling, because, the market movers and investors alike would really like to see interest rates come down. Especially, let me show you this other graph that we, on this show, we tend to look at often. This selling off of bonds, although for 2 weeks in a row, the Fed has kind of paused their bond selling. So that's an interesting inside scoop on what the Fed is thinking. I wonder if they're a little bit worried about some things. So they've paused their bond selling. But, it looks like they tend to pause for 2 or 3 weeks, and then there's a huge chunk. So we'll have to keep apprised of that. Still, bond selling serves to cool the market as well. So, the Fed, they talk and have rhetoric, but then they also have what they actually do in actions. And it's good to always watch people's actions and not just listen to their words. With all that said, people are investors are believing that the market is oversold or overbought. I believe that, right? With all of the data that I've seen over the years, even though there's some new things happening that none of us have seen. So that throws some uncertainty into our prognostication. But then, we also thought that since across the board, kind of tech stocks have not been, doing stellar, they've been doing okay, but investors want them to do stellar. So investors have kind of been knocking tech stocks every time they report earnings that only meet and not beat expectations. And they were setting themselves up on Tuesday for, another one of these poor things from NVIDIA. But NVIDIA reported on Thursday, and oh my gosh, well, they reported Wednesday evening after the market closed. And oh my gosh, not only did they beat expectations, they raised expectations. Basically, they said, hey, the US, NVIDIA is based in California. The US is designing some amazing AI chips. We're at the forefront again. And we are seeing tons and tons of people buying our chips for this purpose of expanding artificial intelligence. It's hot and we're at the forefront. So, I mean, everybody got excited because this is where we innovate. It's not just like stuff like, energy, which is just a thing that happens, right? We mine energy and then we sell it. So, there's nothing special about that. There's no innovation in that. There's no innovation in housing or any of the basics, right? Where there's innovation, of course, gets investors excited. And so when we can see some progress, that's what we saw. And it's quite powerful. But I have to say, already today, kind of the luster is starting to wear off.
Yeah, but when we talk about exciting, I got a chart here that I want to pull up.
Pull it up.
The single biggest day market cap gain ever for a company yesterday, NVIDIA, 247 billion. So when you say excited, very excited. And my question to you, AJ, with NVIDIA, because I know we covered it last week when we did some of the implied volatility, and Dan talked about PE ratios and how they had a lot of room.
Yep.
Like they weren't valued to, overvalued like Intel might be in that capacity. But it's starting to get expensive, right? The NVIDIA stock is getting up there, and it reminds me of when Apple or when Amazon was becoming an expensive stock. What are your thoughts on the pricing of that stock and these movements? Because the whole tech sector and most of these major indices were all led by this one name yesterday. And we, as traders, investors, I want to get in on this, but how can I when the stock is so expensive?
Exactly. So NVIDIA, NVIDIA's got to play kind of has to answer that question. So Apple and Amazon, it was almost a no-brainer. They did a split, right? And the reason why they split, and for our folks on the phone, what that means is you have the price of your stock and you double the amount of shares, right? So it's not really a financial difference. It does cost them some money as far as logistics goes, but what it does is it brings the stock price down so that more of their fans can get involved. So NVIDIA has that question to answer. Should we do that? Do we have enough fans? Now, for Apple and Amazon, to me, that was a no-brainer because Apple and Amazon are B2C customers, right? Apple's biggest customer is all of us. And so we, as purchasers of their products, really wanted to become investors. It's like Apple is in just about everybody's home, and so is Amazon. However, NVIDIA is, yes, you and I want in there, but unless you're, either somebody who watches the markets and you're in tune with NVIDIA, or you're somebody who's like a big nerd who buys graphics cards or you're into mining cryptocurrency at home, not really are many people involved in anything but using the AI products we're not programming the AI products, so we're not buying NVIDIA chips. That's more like the companies like OpenAI, Google, Microsoft. All of those various people are buying the NVIDIA chips for their data centers, but we're not really, we're buying NVIDIA chips for graphics cards. And for those few people left who are mining crypto at home, you might be buying some NVIDIA chips, but otherwise, you're not a consumer of it. So NVIDIA is probably wrestling with that question right now as, does it make sense to go through the process of a split to lower our stock price? Will it really attract that many more investors to make a difference? So that's something that I'm sure the powers that be at NVIDIA are wrestling with. For us, we'll just have to wait and see. As far as affording it, I mean, yeah, you'll have to dig deep in your pockets if you want to afford some of those stocks now.
And I know we talked in the past a bit that your household had some shares for quite some time,
still do.
and you're still holding on to them.
Yeah, like let's pull up an NVIDIA chart for ourselves. I'm looking at the S&P right now, and we can get back to that. But let's look up NVDA. Yeah, we decided not to sell, mainly because I'm going on my trade signals, right, from our downloadable indicator. And so as you can see here, every time we get a possible opportunity that NVIDIA has topped itself out, it doesn't give us the follow through that we need, right? Because my whole basis is that I'm an end of day trader. I look at the end of the day and I look for some specific symbols, mostly given from my indicator. And then if I get that signal, I set up some conditional trading rules for the subsequent days. And at the end of every day, I see whether or not those rules were met and an order was placed, or if those rules were not met, and I have to decide whether I want to try again the next day. So every time I set up those rules, I think that NVIDIA has topped. I don't get those rules met, and then my signal is canceled out, as you can see here. We got a signal on the evening of July 26th. We did not get our rules met on July 29th. I'm sorry, I'm saying July. I meant to say January 29th. And at the end of January 29th, I got a signal that said, hey, stop trying to sell. It's going higher. Same thing happened on January 30th. And we kept trying to get, an order filled for selling based on my follow through day rules. And sure enough, by the time February 2nd rolled around, we had not gotten any of our sell orders filled. And instead, we got a signal to stop pursuing it. And we keep getting these signals, even over here where we were leading into earnings. We don't really do anything into earnings anyway because there's a lot of hype. So sure enough, earnings didn't displease. We were ready to perhaps, liquidate some of our 800 shares on NVIDIA, but, we're holding strong. So NVIDIA is a strong company.
Yeah, and based off of the call covering strategy, you could just sell some calls, right?
We could
Hold the
sell
shares.
premium too. That's for sure. That's something that my family and I have been talking about. We kind of like the idea of just having NVIDIA in our portfolio. We think that the CEO who's been there forever makes smart decisions, whether it be powering up some of the best graphics cards on the world. He made that decision a while ago to ramp up and create products that are specifically for the crypto, and he rode that wave. And now, I mean, NVIDIA is that company that you would go to for AI chips. And so he's powering that whole revolution. He's been ahead of the game. It worries me a little bit that one guy is able to do these good things because I don't want him hit by a bus or anything like that. It reminds me of like people like Lee Iacocca and some of those people over the last 50 years who have been able to make these decisions that have been absolutely phenomenal. But for now, NVIDIA is one that we're keeping in our portfolio. I wouldn't, it's a little bit, in my humble opinion, it's never too late to get into something, but I wouldn't be buying it like today. I would wait for another dip. And every time there's a dip, I would add to my portfolio. I think NVIDIA is one of those companies we want to have in our portfolio for the medium to long-term SIP.
Yeah, and it's in the news a lot right now, so I know we like to avoid that. I was thinking of when you were mentioning that the consumers don't really know about Nvidia. Whenever I think of it, remember these little green stickers. So, like, if you
Hmm.
buy a laptop or something, or a GPU or a CPU, it'll have like this little green sticker in the back. So, to me,
Yeah.
the green Nvidia is very memorable, and uh,
It is, and
well,
consumers. It reminds me of also powered by Windows or powered by Microsoft stickers that were on all computers. But again, you know, how many everyday Joes pay attention to those stickers instead of just saying Dell, saying HP, saying, you and I do, but you go out on the street and you look at the people who maybe have themselves a Robinhood account. And and don't get me wrong, I think Nvidia is in the news a lot, but it's mostly on the news like on CNBC and some of these channels. You won't find it mentioned on a Bravo or anything. You won't see a product placement of Nvidia in a movie or something. You'd see an iPhone or you'd see a PC, right? So it's just one of those questions. I'm sure they're wrestling with it right now, and I'm sure if we see a split, they'll have made that decision that, hey, I think we can attract more investors. We'll see. We'll see. But you're right. It's expensive as F right now.
yeah, and I didn't. When you put it that way, would it make an appearance on Bravo? Probably not. Probably not. And so it'll never be as mainstream as the Amazons and the
Yeah.
Apples. All right.
Even
And
Google, even Google.
even Google. And it is a little bit expensive, but that doesn't mean that you can't get involved in some of the strategies and approaches that AJ and the team at Trading Trainer is utilizing on a day-to-day basis. On the screen, you'll see AJ's free daily workshop. If you're interested in learning a little bit more, getting a little bit more hands-on guidance, this is a great starting point for you. I just threw the link to this in the chat, so head on over there, sign up, watch the webinar. We've got a little bit more of the show left.
Mhm.
We've got AJ's pick of the week. We've got the speed round. If any of the viewers have something that you want AJ to review, you have a question, feel free to throw it in the chat. We're going to take a little bit of a break, and we're going to come back and talk about implied volatility
Mhm.
because that's something that we covered last week, and we got a lot of questions about it. So sit tight. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes. I love that commercial.
Soon enough, it's going to be a Fisker, which I do see the Fiskers out and about driving
Are
around
you
here.
now? Okay.
Yeah, they don't look bad. I just they don't have their financials in order, but
No.
from a car perspective, they look good.
Did you hear,
Uh,
speaking, we talk about a lot of the EV market. Do you hear that Rivian, the CEO, basically said that he blamed it on the Fed, but he said they're going to have zero growth in 2024, mainly because the Fed won't um, lower their interest rates. So that was an interesting comment this week from the Rivian CEO.
and you know what? I see those around, and they look slick. They're like very cool
Oh,
looking
my
cars.
wife wants one so bad.
And I saw my first Cybertruck. I pulled up next to my first
Oh,
Cybertruck. Have you pulled up? Have you? It was kind of a euphoric moment because it's like this big shiny
yeah.
toaster on wheels, right? It's
That's
like,
a good description.
but I had to like. I mean, I would drive it. I
Would
would have
you?
a Cyber like in the future. That's what cars are gonna look like, I
Oh
think.
my goodness. I don't know.
All right. So last week we talked about implied
Yeah.
volatility. Dan, he does a lot of this identifying where there's short squeezes and then kind of taking advantage of the pop using options.
Mhm.
And on his chart, he had a really interesting indicator or
Mhm.
statistic that used implied volatility, and we got a lot of questions this
Mhm.
week about that. So I guess the starting point for me to you would be, or the question would be, what is implied
Mm.
volatility? If we had to go to the Bravo crowd
Mm.
and explain to them what implied volatility is, how do you even go about, simplifying it?
Sure. Well, I mean, first we'd start with the discussion around derivatives, right? Options and futures. And options and futures are a way to basically insure your position, right? You can use put options if you want to insure it against a downturn. You can actually use call options if you want to insure maybe a shorted position against a swing up, right? So you use these options in order to insure your positions. You would use futures in order to insure your commodity positions, right? So that's where we would start. So people, when they're worried about their stock or their commodity going out of where they expect it to go, they'll buy these options and futures. They'll buy these derivatives as a form of insurance. Now, mathematicians, for as long as we have been having these derivatives, have been trying to correlate the derivative price to the actual stock or commodity price. And they keep bumping their heads because as soon as they make a correlation, then the stock price will move and the option price will move, and their correlation goes to heck, right? It doesn't agree anymore. So, if you know anything about mathematicians, what they'll do is they'll basically put this fudge factor into their formula that correlates one to the other. And they'll basically, cop out and they'll say, well, it's the fudge factor. And we can't define that fudge factor, but that fudge factor is, what makes this equal to this, right? And so then what they'll do is they'll take all the known variables and they'll reverse the equations around and solve for that fudge factor. So for instance, if I let's pull up NVIDIA again, NVDA. And one of the things that's interesting, we'll come right here to our options chain, and I'm going to go to the March 15th expiration, and I'm going to come to our at the money call, which I have to scroll a minute because there's so many options. There's a lot of people trading options on NVIDIA. You could see as right now, Sip, the number of orders going through. I mean, it's just like Richter Nick over here. So I'm going to go ahead and grab my option symbol, and I'm going to put that back into my chart. So instead of looking at the stock price, I'm going to look at that particular at the money call option. And one thing you'll notice here is this purple line that my charting software plots in addition to the regular price. In fact, if I change my open, high, low, close bars to just a line on close bars, you can see this line here. So basically what this purple line means is they have measured historical volatility for NVIDIA, put it in as that fudge factor into that formula, and this is theoretically what the option price should be if they put the actual volatility measured by historical volatility. Think of historical volatility as looking in the rear view mirror of your car and seeing the roads that you've been on. And if it's volatile, you'll say, okay, I've been on some volatile roads for the last 30 miles. It's probably going to continue being volatile. I'm going to go ahead and take that volatility number and put it into my equation. And this is theoretically what the option price should be based on the volatility I've had over the last 30 miles, right? But then again, we look ahead through the windshield and we have some expectation. Maybe we even have some maps or we have Google Maps and we can kind of look ahead at what the road might be, our anticipation of what the road might be. And so we make some decisions based on what we think is coming, right? And so we may, if things look like they might be giving us, we'll also factor in kind of what we heard on the news from the weather forecasters and all this good stuff. And we'll make our own decisions as to what we think is coming ahead. And we'll buy these insurance policies according to what we feel is happening and according to what the price of those insurance policies might be. And so it's whether we're substituting in for the fudge factor what we know we've seen over the last 30 miles, or whether we're solving backwards based on what these options cost right now to find out what that fudge factor is when we reverse engineer it. One thing to note, you don't get an implied volatility number, right? Unless your underlying symbol has derivatives, right? If a stock company if a company who issues stock has decided that their stock should not be optionable, you won't find an implied volatility. The only way to derive an implied volatility number is to look at these insurance policies that are sold and see whether they are higher priced or lower priced. So kind of coming back to what Dan does, Dan looks at the historical volatility numbers, which are basically looking through the rear view mirror at the past 30 miles, or should I say the past 30 days, and comparing it to this implied volatility number derived from what the option prices are, right? And if the implied volatility, what people are paying for those options, is higher than what the volatility we've been seeing, the options are considered to be overpriced, right? And then, they tend to, whether the historical volatility comes up and meets the implied volatility, or the implied volatility, there's some reasoning and we realize, wow, we kind of hyped things up, and it was overhyped. They tend to come back and cross. And then when the implied volatility is lower than the historical volatility, we consider the option underpriced. So these are places, right? This kind of game that the historical and the implied volatility make, every time there's a major crossing of them, that's an opportunity to either buy or sell your options. If your options are overpriced, you might want to go ahead and sell them. If they're underpriced, you might want to buy them. And a lot of volatility traders just trace that. Like, for instance, we saw here over NVIDIA that the theoretical price was actually above what the going price of NVIDIA was, right? Of this option was. So that means that the option is underpriced based on theoretically where it should be, based on the volatility we've been seeing. Then they kind of aligned, as you can see here, they aligned. And now we see this is happening again. The theoretical price of the option should be much higher than what the price of the option currently is. That may be a buying opportunity. Now, Dan gave us an aha moment, though, and this is the last piece I'll cover during this kind of trending topic. Dan said, don't forget how historical volatility is calculated. Historical volatility is calculated looking at the past 30 days. And if something happened during the past 30 days that throws that moving average off, like, I don't know, the earnings from a couple days ago, then that throws off the whole number by a fixed number. And sometimes, and one of the things that Dan likes to talk about when he gets way into the weeds on this stuff, is how to compensate for these, what I call transient external stochastic shocks. So you have to take that into consideration. And sometimes newbie volatility traders don't do that, and they get, basically false signals. So you have to know how to take your data with a grain of salt and not just trace those two curves, because sometimes, especially if something's in the news, and again, that's why we're always attracted to the most boring stocks. But if it's in the news, sometimes you've got this external influence on your data that messes up your trade signals.
And we'll definitely touch on some other boring names where we might see some opportunities. But I do want to ask the follow-up question. I liked your analogy of the map and the weather in the sense that the weather is not very predictable, right?
No,
Like
even with these weather people,
tools, right?
yeah,
But a
they
map
tell us one thing, but shit, they're always wrong.
and things change, right? And
Mhm.
but when you use the map, an earnings report is one of those crossroads that every 4 quarters you can expect. And so the trends leading up to that crossroads tend to be I don't know, natural, right? And
Mhm.
then you
Predictable.
predictable, and you have some option strategies that allow you, out of the 27 different combinations, that allow you to take advantage of it. And that's kind of what Dan is, and you are going to talk about in this uh mentoring session, in this
Mhm.
webinar next week, right? And so
Yeah.
I mean, that's going to be a solid hour of how to actually read the map, take in the weather reports, and to utilize opportunities, right? And
Yeah.
so that's going to make for a wonderful presentation. I just went ahead and threw the link to that in the chat. Head on over there, sign up. Even if you can't make it, sign up. You'll get a copy of the replay. I
Mhm.
know that was something that people were asking about. So we'll get some more insights on
We're
that.
also gonna have the replay transcribed, so even if you're there live, it would be nice to have that transcribed and, it's gonna be offered. There's no upcharge or anything. It's just the price of attendance. So just be there or, sign up to register, get the replay, get the transcription, get a chance to be there live to ask Dan and I questions. Yeah, it's gonna be a good time next Wednesday.
Yeah, and Dan was a Chicago Board floor options trader, so I know that from my experience, those guys have a tremendous amount of insight that goes back decades, that helps validate some of these ideologies, the rationale, the strategy. So always good to hear it from somebody that's
He
been doing it for
didn't
a long
he
time.
didn't remember SIP, but I used to, before I got too comfortable teaching my classes by Zoom webinar and GoToWebinar and all those things out of my home office, I used to actually teach my classes live, and I would take people to Hyatt outside of the Chicago airport, um, and we would spend 4 days all with our laptops out doing trading. And then on the 5th day, I would take them on the tour of the CBOE. And by that time, and then we're talking 2007, 2008, the CBOE had pretty much become an electronic trading floor. In fact, it had only the CME had a couple of open pits left, but people would go and visit the CBOE, and they'd kind of my folks kind of got disappointed because all you'd see is some people sitting around at computers, and it was very quiet. It wasn't what they imagined from like the movies and stuff. So we would then take them, the CBOE would host them into this room, and Dan was still on the payroll for the CBOE. He was no longer, an active trader because they were pretty much all gone, but he stayed on as an educator for the longest time before he went off to make market taker mentoring. And he actually talked to my people a couple years in the row in a row about some of the history of the CBOE. He probably doesn't remember that I was one of the groups that would come back annually, because I'm sure he had groups on a daily basis that he was shilling to. But we at Trading Trainer knew Dan. Any of the long timers that have been with me remember hearing Dan speak.
Yeah, and I worked in that ecosystem for about 10 years, so I loved seeing all the jackets. But you're right, all of the excitement went away, in the sense that the people are just sitting around on their laptops, just
That's
like,
it. That's it. That's what it is. That's what the CBOE is these days. Although the amount of transactions going through there is still monumental. It's just not seen in open outcry
yeah.
pits.
I just remember the pits getting smaller and smaller and smaller,
Mhm.
and now there's just like this corner over here where maybe you got to walk over to somebody with your iPad and be like, hey, Jim. All right. Exciting stuff. The link to that webinar is in the chat. Now it's time to dig into some opportunities, some
Mhm.
potentials. We've got our speed round coming up, but before we dig into that, AJ's pick of the week. So let's go ahead and see what you've identified as an opportunity. AJ's pick of the week this week is Marine Max, ticker symbol
Yeah.
HZO. Is this, I'm assuming the word marine means boats, something in boating?
Yeah.
Yeah.
Yeah. Marine Max is a B2C company, a retail company that sells boats and yachts to the public, the higher end of the public, but still to the end consumer. They do business with some of the biggest manufacturers, but they're the ones you would go to in order to get your boating supplies and get your yacht on. And they're doing okay, but more than doing okay, they're boring. And they're making money. Their earnings are always positive, as you can see from the chart that I've got here. I actually, and I'm going to turn off my confirming indicator signal here and instead show you my trade signal indicator. Um, I'm watching this one. Many of my program participants know that when I've got a new symbol that I'm unfamiliar with, and until about a month ago, I was unfamiliar with Marine Max, but it came up on one of my screeners that we offer our program participants. And I started following this and I got follow through on a buy signal. So buy some shares of Marine Max. And Marine Max doesn't have that active of an option chain. It has active enough that I'm okay to sell premium on it. They really don't have any back month options I would use as substitutes. So we're, for our covering position, either buying shares of the stock or shorting shares of the stock. So I got my confirming indicator and my follow through on February 2nd. I've had a couple of signals that have canceled each other out without giving me follow through, very similar to what I talked about earlier on NVIDIA. So I'm still looking for that opportunity to sell some call premium and buy some protective options. I actually looked at this latest little pop that happened around the new year in, the from 2023 to 2024. I'm looking at that as kind of a stochastic shock. Instead, I'm looking at my resistance level around about 34, 33.50. So I'm looking for, at the most, I think I'd let it go to 36. If it goes above 36, I think my knee-jerk reaction would be to just sell that underlying symbol when I got my top signal. But if it reverses or finds a top ahead of or under $36, this is premium fodder. I would sell an at the money near-term call option, and I would buy a protective put down here near my break-even price. Protective put would be 3 to 6 months out. So I'm waiting for that opportunity, but I wanted to call it to everybody's attention because I think right now is a great opportunity for you guys, number one, to be planning out at least a paper trade and, seeing whether this is one you'd want to sell premium on, but definitely the planning process. And you'd be looking for a top signal. If you're not already in a covering position like I am, your top signal would be your signal to go ahead and short some of this stock. You'll need a margin account, but you short lots of 100 of this stock in an opportunity that when it finds its bottom again, you would then sell put premium and buy protective calls. So that's my next signal, looking for a top. Folks, I think you should check out this Marine Max. Not the most popular, but it is something that is drawing my attention recently.
Yeah, I just pulled up their website. Pretty slick promo video. Product looks quality. I wonder if the potential economic slowdown going into the summer could have some effects on. I consider this a luxury product, right?
Mhm.
Maybe there's a little bit something there, but definitely when you dig into the analysis, it hits a lot of those points that you like, that we like to have in a name, in that it's boring, it's priced well, the earnings there's some nice support. So whoever brought that to your attention, thank you. We're gonna definitely
It was our screener. We have a screener that screens through all the stocks, indexes, and ETFs every evening and finds some high probability little nuggets that we should be looking at for premium. So it was one of our screeners.
Yeah, a little bit of a throw off with the name Marine Max and then the ticker HZO. Who knows where that comes from? Anyways,
Because they can't have numbers and tickers, so they're looking for H2O.
oh,
But yeah, and that would be, you brought up a good point, which is why maybe being in a covering position that's a short might be, better for the medium to long term than my long position that I'm in with my paper trade. And so when I get my top signal, not only am I going to be selling call premium, buying protective puts, but I'll also set up a paper trade with a short. And, I tell this to all my folks who are part of my program. If you're unfamiliar with the symbol, take a moment and paper trade it for a cycle or two every way, because in paper trading, we call it, affectionately forward testing. You don't have the benefit of hindsight. So you're actually trading the real-time signals, not because you're necessarily trying to learn how to premium sell, but because you want to see if you use this set of signals and you use this trade plan that you came up with, if you can make it work. And usually I forward test compared to other similar forward tests happening at the same time, kind of like an ABC or multivariant test where I'm placing these candidates head to head so that I can find out which one actually in real time pans out. And that would be the one that in the future, like maybe 3 or 4 weeks from now, I go ahead and pursue with real money. I recommend to anybody who's doing any sort of premium selling where time passing by, where theta decay is your profit mechanism, that you take a moment and you forward test your candidates, your trade plans, and your signaling to make sure everything looks like it'll work, so that when you do deploy it, it'll last you months and months of just income generation.
And that's what one of the principles that's taught consistently at Trading Trainer is to create a system or a portfolio where these opportunities are almost like a monthly or a weekly paycheck. And so once again, the link to that webinar is in the chat. So if you haven't checked it out, head on over there. Otherwise, we're going to move into our speed round. So all week, we've got some names coming through the chats and the DMs, and people want some insight. So on the show, we are going to go ahead and run through a few of them. If anybody watching has some additional names, feel free to throw it in the chat. If we have some time, we'll run through it. Otherwise, we're going to head on over to the middle of America, the Midwest. This is Meredith in Cedar Rapids, Iowa, interested in a name we've covered very frequently, and that's Zoom.
You know what, Sip? Last night we had a hot seat. So we have a weekly workshop, and this is kind of a hands-on thing as part of our program where all of us get together. We tend to, on a weekly basis, look at what candidates folks have on, their radar. We give our 2 cents as experienced traders to those. We pick one, we plan it out, and that's our usual. But pretty much every month, every 2 months, we do a hot seat where we have one of our program participants volunteer to take us through kind of their decision making month to month as they do these trades, right? And last night we had Trish come on, and she totally blew us away. She hadn't even been one of our high-end coaching clients where we've worked with her one-on-one. She's just a program participant of the self-study program. And one of her candidates was Zoom. So I wonder, I'd have to look through the roles, but I wonder if Meredith is part of our program and wants some follow-up on Zoom. Hey, Zoom is giving us a signal today. I'm looking at it right here. Zoom is giving us a signal for possibly buying some Zoom stock, or I believe Zoom has enough activity that instead of buying the Zoom stock, we could go out in time, maybe looking at a September 2024 or even the January leap, and grabbing some of that Zoom leveraged stock replacement, and then seeing where we go from there, whether we sell some sell some call premium, or even just do a directional trade. So I like the signal you're seeing. What I have to say is this is an end of day signal that's appearing today. And so we're not going to act on it today. We're going to wait till the end of the day. We're going to make sure over the weekend that that signal actually stuck, right? And then we're going to look for that follow through, because Zoom has had a tendency, and this is something I only know that because we really dissected like the past 3 months of Zoom last night. Zoom has a tendency to give us signals, not give us the trading day follow through, and then canceling its signals out, which it has done quite a couple of times. But we'll see what happens. But if this signal sticks, if this evening it's still there and next week we get the follow through, I wouldn't see why we wouldn't, place a trade. Now, also take a look right here. It's going to be on the 26th after the market close that we're going to get earnings. That's basically, next Monday. So maybe we don't do anything until we find out how Zoom went through its earnings. Let's wait until then to do any action. So I don't want to open any positions on Monday. I want to get through earnings. I want to figure out what that is. It's probably too late right now. Maybe you could do some sort of earnings play, but you're getting to the point where we're even too close to do that. You'll have to do some weekend analysis if you want to jump on that bandwagon. I'm not sure you do. It's kind of fast, unless you've already been thinking about it. But otherwise, maybe Tuesday or Wednesday, we decide to get into some Zoom in preparation for making it into an income generation. Trish totally had made this into an income generation trade, walked away with some nice premium after a couple months.
Yeah, Zoom is a product that I use frequently. However, I haven't seen much innovation. Like it's the same product as prior to the pandemic. So I'd love to see them do some innovative things to maybe, get that stock
I've
price.
seen them add features because I use Zoom as well, but I haven't seen them actually innovate or actually give me any benefits. It's kind of like they've gone into the process of like throwing just features at their platform that maybe you need, maybe you don't need, but they haven't done anything monumental.
It's like, look, here's an idea, Zoom. I need you to replicate me into an AI so that I don't have to show up to the meeting. I just press the button, it does the meeting for me. Now we're talking.
Or yeah, that makes me think maybe Zoom needs to do a strategic alliance with Apple with their new headset,
Ooh.
or Meta,
Get some more NVIDIA chips to get it, to have
that only benefits Nvidia, man.
processing even more. All right. Thank you, Meredith, for that. Moving on to our second name over in my former neck of the woods. This is Chris in Evanston, Illinois, interested in Goodyear Tire, ticker symbol GT. Tires, AJ, that's as boring as it gets, no?
Yeah. Goodyear had a really nice earnings call. I'm not sure how many people tuned into that call, but they're doing well. They have been doing well. I have to say a couple of things, and that is, there's been a huge, Goodyear not only makes tires, they also have a bunch of retail franchises that are out there. And they're at a premium right now because there was a lull in the number of people who wanted to become auto mechanics. And so when you bring your car in, a lot of people are paying a premium right now, and they're having to wait just because it's a supply and demand thing. And what that means is that these franchises who make a percentage profit by charging more, they're able to make higher profits. Now, that's not really a sustainable thing because over time, people will engineer a solution that doesn't require the people, in this business. But right now, right this minute, Goodyear's bringing in some nice profits. we got a signal on February 20, right? And I didn't enter this, but let's look. I'm going to jump in on a intraday chart to see if I had gotten follow through on the 21st. So I'll give you guys kind of an insight right now on to how I look to see if I've gotten follow through. So let me jump in on the 21st here. This is the 20th. Here's the 21st. It's pretty straightforward. On the day that I want to trade, I want to make sure I'm trading. If I'm trading a bottom, I want to make sure that I'm trading above the previous day close. So if I draw a line here, I want to be trading above the previous day close, right? Boom. I wait until the afternoon session, right? The morning session typically has a lot of what we call amateur traders, retail traders that are doing trading before they head off to work. And it also, with the economic news mostly scheduled in the morning, there's a lot more volatility in the morning. So I wait until the afternoon session, which is approximately 12:45, 1 o'clock Eastern time. So if I go ahead and draw a line here at 12:45, I'm not trading until after this white line. So basically, in the afternoon session, I'm going to make sure that price is trading above the previous day close. There's also a day trader's kind of hack, which is the day traders look at the first half hour of trading, right? And they call this the open range, right? So if I take the high of the first half hour and I take the low of the first half hour of the day, this range here is called the open range. And if I'm trading a bottom, not only do I want to be above yesterday's close, I want to be above my open range. So as you can see here, I did get that follow through, right? There's one more criteria I usually look for. Well, there's a few more, and I usually share this with my program participants. But if I don't get follow through on this day SIP, and I want to look at a subsequent day, I'll also make sure I'm above the confirming day's close. In this case, it's the day after, and the confirming day close and yesterday's close is the same. So anyway, I got follow through. And so I would have opened a position there. Let's go back to the daily chart. So I would have gone ahead and opened up a position on the 21st. That would have been my opportunity to either buy some Goodyear stock or buy some leveraged options that are substitutes. I'd go pretty far out in time. I've been talking about the 2025 leap, and I'd go pretty deep in the money, right? I like to target getting something trading at parity. So it's a substitute option. It looks like Goodyear's kind of hovering. We may get a separate second opportunity to do that exact transaction. That's the beauty of our strategy. You could be a day or so late on the signal and still oftentimes get in. But I think you brought this up, Chris, because you were wondering if I saw a buy signal for stock or buy signal for, substitute call options. I do. And if I go back a little bit further, maybe we look at a year, it looks like this is a good place. This is a level of support. And so we would expect to see that. It looks like we've got maybe some resistance about $1 or $2 higher where we would decide to sell some call premium. So you're setting yourself up for a nice income trade on this. Yeah. I think Goodyear's pulling out some numbers. Make sure you use protective options. Make sure you know exactly where you would make the decision of whether you should sell premium or whether you should just sell out of the position altogether. But this looks like the bones of a good premium trade, and it looks like you can still get into this. Good eye.
Yeah, and when you compare the pricing to NVIDIA, $12 versus, what was that, 800, I think we
Yeah,
saw
and let's look
earlier.
at what the substitute option's going for. The substitute option's going for, I would use the $5 strike. It's going for a couple bucks less, $7.65. So if you don't want to pay the $12.40, I might use the $7.65. So the $5 January 2025. This is called the 2025 Leap $5 call.
All right. Thanks for that, Chris. Goodyear Tire, ticker symbol GT. Moving on to our third and final name in the speed round. This is Beck from Dallas, Texas, interested in American Airlines, ticker symbol AAL. What's the word on the airline industry these days?
I mean, American Airlines this week, you guys. I'm not sure if this is why this is up on our speed round today, Beck. But maybe you're thinking about American Airlines announcing that they're raising their baggage rates $5 instead of $30. It's going to be $35 to check a bag, and that's only if you do it online. If you wait till you're at the airport, it's going to be $40 to check a bag. And American Airlines also reported how much they made in 2023 on baggage fees, and it was like I want to say it was way more than $1 billion. I could have that number wrong. I'm going by memory, and I'm 51, so I can't remember anything these days. But that resonates for me. So I'm wondering if you're thinking that this is a good buy. It sure was a good buy when we got this signal back here. It's been confusing for us as premium sellers. You can see that instead of being one of these boring sideways stocks, it kind of is on this little bit of a medium duration long uptrend. Doesn't mean you can't sell premium on it. What it does mean is that your initial covering position should either be long the stock or buying a call option, a substitute call option, like we just picked one for Goodyear Tire. You would want to do the same thing. And that your monthly premium, if you do decide to sell premium, won't be like the best return, because you're also kind of doing a hybrid trade where when you get out on the back end, you expect to make some money on that initial covering position. We did get a signal. Let's zoom into more current price action. We did get a signal last night, but it does not look like we're getting that follow through that I described earlier in the show. So, you get to the end of today and you might evaluate whether you want to look for follow through at the beginning of next week and through those days. But yeah, this is a signal. And you can definitely try to act on it, but I would make sure you have your risk stops in place. If things go against you, I would make sure that you trade the signals as they come and just set your expectation accordingly. And at this point, I'll emphasize one more time, I wouldn't set up premium trades where my initial covering position is betting against the uptrend. I would only set up initial covering positions that are going in an uptrend on American Airlines. They seem to be slowly and behind the scenes doing better and better.
Yeah, I tried to find that statistic on how much they made, and the only one that I found was the 20 top carriers raked in $33 billion last year in baggage fees alone. But I mean, it makes sense, right? Like,
I swear that American Airlines made close to $2 billion in just baggage fees. So it's a moneymaker for them. It really is, because they kind of separated out the baggage fees, but didn't really reduce airplane tickets by that much. So it's kind of like just an added business, right? In theory, they were separating it out and they'd say, hey, you get a cheaper ticket. And now if you don't have baggage, but that didn't really happen. It's kind of like, what was that thing that Biden went on a tirade about how they're still charging the same price for like Oreos, but it's a smaller package. I think that's kind of what this is just a business marketing ploy, but it's working. So good for them.
All right, AJ. So we're running a little short on time here. We're coming close to the close of the show. NVIDIA has been the topic of the week. Heading into next week, we're going to be closing out the month, and heading into March, should we be looking out for any economic news? Are we looking for inflation numbers, employment? What's going to be the next data set that kind of helps us develop what direction are we going to keep going up, because that's what the trend is showing?
Yes, it is. But I'm looking at the VIX, right? That's what I've pulled up here. And the VIX is creeping up. And so that's telling me that overall investors are starting to buy options. They're really, worried that the market is overbought, which it is. But now it's starting to creep into their decision-making process. And, I kind of hinted at it in the beginning of the call, but the SPX is showing, more signs of weakness, still on an uptrend. And we did have some good numbers yesterday, thanks to NVIDIA, but I really stand behind the fact that it's a transient external stochastic shock. As soon as the hype wears off, I think we're going to see some more fear entering into the market. I'm still waiting, Sip. I've got all that economic data that says, we need a correction, and I'm ready for that correction. I'm still trading uptrends, but boy, am I hedged, and boy, am I protected. So I think that our investors should do that as well. Trade what you see, but also common sense here, folks.
And that's what options are great for. Options are a great tool for moments like this where we don't know where things are going to be, and you could protect yourself. So thank you, everyone, for tuning in. That's a solid hour of some insights into the options market. I do want to thank everybody because this week we did cross 1,000 subscribers on the YouTube channel. So thank you to everyone. If you're not already a subscriber, head on over and hit that subscribe button. If you're watching on any of the other channels, hit that follow, hit that like button. We do appreciate it. And with that, AJ, I think we're just going to sign off. If anyone has any questions, comments, or concerns, feel free to send us a DM. Leave a comment in the comment section, and someone will get back to you. Otherwise, we'll catch everybody next week.
Thanks, everybody.
See you later.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.